The difference between a trading strategy and a trading system is what we're going to talk about today. Fellow traders, ladies and gentlemen, welcome to the live show with Rob on this fine Tuesday, the 21st of October, 2025. We're back again and we're chatting a little bit about strategy and about systems and the difference between them. And the reason I'm doing this today, and I'm going to go into detail, and I'll wait a few minutes until everyone's here, is so many people still don't understand that there's a difference between having a business plan and making some money in the markets and trading with a system or a bunch of charts or something to that effect. So that is the big issue here, guys. That's the big thing that we're going to talk about today. Hope you guys are all well. Hope you're still there. Don't forget, trading is risky. Let me take that out of the way so you can actually see something on the screen. And let me make my picture a little bit smaller for now. Maybe I'll make it a little bit bigger again later on. We'll see how that goes. The fundamentals are still affecting the markets. Everybody's still going on about the fundamentals in the market. I see a lot of you guys have joined the Telegram channel, which is absolutely fantastic. It's good to see you guys on there, and it's good to see you guys chatting to each other. And it's not all about me. It's all about you at the end of the day, and it's all about how you go and all the rest of it. Okay, so I see you guys have mentioned on the Telegram channel that the live show is now on. So I hope you guys are here. I hope you guys are joining us, and I hope you guys are getting on board. Shane, how's it going? Hello, Fani. And if you guys want to, you can mention to everyone that the live show is now on. That's absolutely perfect. I am going to go into that detail about system and strategy. A lot of you guys would have heard it all before. It's not your first rodeo with me. Some of you guys know, and you've heard it in every single video, and you're probably bored with it by now, but I have to reiterate it, and I have to go over it again and again and again. I get the question quite often, is the markets really 50-50? Are the markets really 50-50? And you said the markets are 50-50, but, and these are the types of things that we have to go over again and again and again, because it's really difficult for people to grasp the fact that markets are actually 50-50. So what's happened to the account? It's taken quite a knock, actually. We lost on Brent, we lost on South African Rand. We did win on the Japanese yen, but this one had a trailing stop, which was about $110 in profit, and it got taken out. So that one is well and truly done. Where's the big money this week? The big money this week, VIX paid off, and that's a biggie. That's a decent one. Okay, so Bitcoin is moving down again. Everybody's freaking out about Bitcoin, but I did tell you guys last week and earlier on, this is bearish, this is going down. And I'm kind of expecting it to get down to 90. As a result, I can see a giant head and shoulders developing on top here. So Bitcoin is looking a bit iffy at the moment. I wouldn't be trading into that. And this morning I did ask, is this the end for the S&P 500 for now? Because it keeps hitting this resistance level here, bouncing off that and coming down. Seems to have hit a very hard resistance level. But then we have to remember we are in earnings season, and earnings season will normally take us into a new realm. Depending on how the earnings go. Are they going to miss? Are they going to hit? Big question you've got to ask yourself, though, is even if the earnings hit and everything goes well in the shares and they all release great figures and figures that hit target and everyone's happy and all the rest of it, what will the institutional money be thinking of what's going to happen in the next release? Because what they're going to be looking at is that the government is shut down. There are a few things going on. There's no money in the market. And next time these companies release their profits, they might not be as good as they are now because of certain factors in the market. So you've got to be careful of that, because people don't look at today. They look forward, and they look at the forward price to earnings. They look at earnings per share in the future, not today. Today, they look at what's happening today, but they're looking at what's going to come tomorrow. And that's what you're investing for, because you're not investing for today. You're investing for tomorrow. And that's what it's all about at the end of the day. I do want to put a bit of an investment video together for you guys again, or do something to that effect. I will look into that scenario as well. Okay, so let's see what we've got here. We've got Shane, we've got Fani, we've got Peter. Yes, how's it, Peter? Good to see you again. We've got Lynn, hello, from Ibiza. Everyone is green. Love it to bits. Good to see you. Good to have you on board. Absolutely lovely. So at the moment, there's only 7 people here, so I'm just going to wait a little bit before I start the training, before I start going into the details and start talking about a few things. I don't know if it's because people don't know the live show is on, or if it's just because it's quiet at the moment, or what's going on. We shall see at the end of the day how many people pitch up, and then we'll get on with it and start chatting about it. Euro, United States dollar. I did mention to you guys on the Telegram this morning that I have turned this around. I also mentioned it on Trade of the Day. I've turned this around. Yesterday I actually called it long because it had broken structure and it was above the structure and looking like it wanted to go up. Looked all good, and this morning it broke back through the structure, back into a bearish trend. So now I've got to relook the whole situation, so I decided to go short on it and turn it around and make that into a short trade now. So I've actually taken that short trade on all the accounts, so except for one, I think. That's cool. No problem. As you guys know, we use this one for the training, so you can't use all of them at the same time. It gets a bit awkward and a bit complicated and a bit, so we just use this one for the general live shows and the training and that sort of thing. It makes it easier to do the videos. Hopefully the sound's okay. Yeah, I always struggle with that, but hopefully you guys can all hear me well. Yes, the live show is on, guys. Jeez, I'll tell you what. Let me actually answer you on Telegram. Yes, I am live. Maybe, I don't know if I can send you guys a link or what. Perhaps I should do that in the future, but now I'm not sure where. Guys, just type in Rob's Logical Trading, go to live, find the live videos that are on. You'll find me there, always on. I'm literally typing to you guys live. Yeah, but Shane is here, so yeah, quite interesting. All right, guys, so I'm going to get on with the training now. I'm going to start talking about a few cool things. Today I want to talk about the difference between a system and a strategy, and I've got a reason for talking about the difference between a system and a strategy. I see most of the guys are here, and Shane has hinted that I need a secretary. Yeah, perhaps you're right, I don't know. I do everything myself. I'm a trader, an editor, a sound engineer. I suppose I don't know, what do you call it? A podcaster, I suppose. do everything, do the whole thing at once. Why not? Yeah, need a secretary. That would be great. Yeah, somebody else to do all the. Oh, nice to. I see these guys that they have like all these people around them doing all their stuff for them. It's great. I guess that's just not me at the moment. Right, let's talk about the difference and the story between strategy and system. Why do we need a system? Why do we need a strategy? The difference between a strategy and a system is really important to understand. It's just wording, it's just terminology. Now, in the stock market, as you guys all know, there's a lot of guys out there that go out on a course and they learn all this terminology and they learn all these abbreviations and they learn all these things. And they come back and they think they're the bee's knees to the market. They know everything about the market. They are the market gurus or whatever the case, because they've learned all this terminology in the market. Guys, terminology is not important. Words are not important. Whether it's system or strategy, you can call it whatever you want. All I want you guys to understand is that you need to separate the charts from the business plan. That's basically what I'm trying to tell you, is take the charts and put them on this side and take the business plan and put it on this side. And the reason I talk to you about the difference between charting and the strategy is because charts cannot make you money. Charts cannot make you a profit in the markets. And we all know that, and we've discussed it on many, many occasions. Charts cannot predict the future, and neither can you. So if you take a chart, you look at a chart and you say, well, I want to take this trade. It's very easy for you to take a trade based on a chart, because imagine trying to take a trade just based on these numbers or just based on the fact that you feel like it's a good thing. So I do that. If you were investing, if you're investing in a company, you would look at it and think, oh, this looks like a nice place because it's doing well, it's improving, they're growing as a company, they've got a great price to earnings ratio, they've got a good CEO, they've got good assets and liabilities. And then you invest in that and you set and forget it and you don't worry about it. You're not looking at a chart and thinking, should I time this and should I buy it now or should I buy it later? You're just going to buy it because it's a great company and because you want to invest in it for the next 30 years. That's a completely different scenario, and that you don't need a chart for. You don't need charts at all for that scenario. So if you don't need charts whatsoever for that kind of scenario, let's say you don't need any charts at all to take an investment, then why do you actually need charts to take a trade and try and time the market? Well, this is where it becomes slightly different, because when you're in leverage trading and you're trying to time the market, you're trying to get in and out of trades, effectively what you're looking for, all you need is a guideline to show you where you are in the market. And that's what these charts are all for at the end of the day. So you can take this and say, well, what happened in the past will in all likelihood happen again in the future. So what I'm looking at is I've got a chart. It's been going up, it's been in a range, and now it's bearish and it's going down in that range. So I've drawn a resistance in, I've drawn a support in. Now you guys know how to draw the resistance and the support in because I've shown you that on the other systems. But if you want to know more about that, we will go into more detail about that in other videos. But for now, we're just going to talk about the difference between the system and the strategy at the end of the day. It's quite warm here in Cape Town these days. Right, so what we have here is the resistance. What we have here is the support. We know that that's the range. And now we know that it's in a bearish situation. It broke through, it counter traded. We trade three ways, as you know. We trade with the trend, we trade in the range, and we counter trade or breakout trade or breakdown trade. Now, that doesn't make five, that makes three. By the way, the last three are all one. You know, breakout trade, breakdown trade, counter trade is the same thing. Just depends if it's in a trend or if it's breaking through a resistance or breaking down through a support. Now, what I'm trying to get forward here is that you use the system, which charting is the system to take your trades and to manage your risk. So now you can say, I want to take a short trade here. I want to take a short trade here because it broke through this line, because it broke through this trend line. And because it broke through that trend line and it broke back into trend, now I want to actually take a short trade on this particular instrument. So I'm looking for a short trade here. So I'm going to take a short trade based on the fact that it's broken through that line. And then I can look at it and say, so if I'm taking a short trade, I need a stop loss. Where am I going to put my stop loss? Then I'm going to look, there's my stop loss up there. So I'm putting my stop loss in that area, far enough away that it's an invalidation area, and say, oh, that's where I want my stop loss. And then where do I want my take profit? I want my take profit to be more than my stop loss, because we make more on our wins than we do on our losses, lose on our losses. So we want to have a higher number there. It doesn't have to be 2 to 1, doesn't have to be 4 to 1, just has to be higher than the loss you're taking, because it's a form of insanity to be risking $250 and trying to win $50. That doesn't make any sense, does it? So you want to be targeting a higher amount. So our target is over there at the bottom of that level, and we're saying, okay, we could make $324 for a loss of $250. So now you've managed your trade. Now that is the system. That is generally your system. But what's the strategy? What's the strategy, and why do we talk about strategy? So strategy is the business plan. Now, if you were going to start a business tomorrow, you would have a plan. Firstly, you'd know how much capital you're going to need. You'd know what kind of business you're going to start. You'd know where you're going to have it. You'd know if you're going to need staff. You'd know if you're going to need stock. You'd know if you're going to need machines. You'd know if you're going to be in the high street or if you're going to be somewhere else. These are things that you would plan. It doesn't need to be a 1,000-page business plan, but you're going to have some kind of plan. So when you get into trading, you need some kind of plan as well as to, how am I going to make my profits? Am I just going to click on little lines and predict the future and hope that I'm going to make some kind of insane profit from this? Is that how I'm going to trade? Is that what I'm going to do with trading? No, you're going to have a strategy, and the strategy is simple. Make more on the wins, lose less on the losses. And this is why you need a business plan. This is why you need a strategy. And the strategy is simple, as I always tell you guys, simply, when you take the trade, look for the invalidation area. Once you see the invalidation area on your trade, work out 1% from your cost back to that area. In other words, keep the risks the same on every single trade and risk 1% of your account. You can risk 2%, 10%, it's up to you, but keep the risk the same on every single trade. Bearing in mind, if you risk 10%, you're going to lose your whole account on leverage trading. So we risk 1%. Now, you know that the size of your trade is let's say it's this $25,000 account. Now you know that your trade is $250 away from the cost. You know the size of your trade. Then you just work out if you can make more on your win with that trade, and then you manage the trade. You don't just click out of the trade when it goes into profit. What you do is you take your stop loss up, you put it up to cost, and then you start putting it into profit, and you follow it up, and you end up with a mishmash of small wins because of that. But you will take a couple of gargantuanly strong, good wins. So that is the difference between a strategy and a system. If you've got any questions, ask them now or forever hold your peace. But that's today's lesson. That's today's story. And that's what we're going over today. And that's what we're talking about today. So hopefully that helps you, and hopefully that takes you in the right direction. So let's go through the questions. Let's go through the comments. Let's see what we got here. So everybody was talking about whether the live show is on. Yes, it's on. Here we are. Hello. Okay. It's reached the demand area. I think better let Rob comment. You could, well, always lose. Good morning, everyone. Good morning. Good morning. Good morning, David. How's it, David? Welcome. Good to see you. I'm just wondering what you guys are talking about. Which you took the euro US dollar trade. 15-minute. Reach the demand area. Okay. The euro US dollar trade short. I've taken it short, and for me that just looks just great. It looks like it's going to work out. We're looking at a short because it's below that level. It's heading into that level. It's heading back into trend. So that's why we're short on that trade. Okay. So yeah. So now that you guys all know the difference between a system and a strategy, I hope you all understand. Number one, that you need capital to trade. Number two, that a business plan is imperative to making money in the markets. It all came to me many years ago when somebody turned around to me and said, you can't time the market. And I thought they were crazy. I thought, well, if there's so many traders in the market, then of course you can time the market. I mean, come on, let's not be silly. Of course you can time the market. There's so many people doing it. Well, I thought there were so many people doing it. I didn't know that 75 to 95% of traders lose money. How was I to know that? That's absolutely insane. And then you find that out. And then you figure out that leverage trading is completely different to investing trading or spot trading. So it's a completely different ball game. And then you have to understand the possibilities of loss. And then if you're going to lose in the markets, you've got to look at this and say, well, if I'm going to lose in the markets, how am I going to work this? How are you going to work this profit thing? Because there's a lot of traders out there that get into trading and they actually believe that they're going to get into trading and they're going to have a win rate and they're going to make money from that win rate because someone taught them that. Someone said that you need to win more trades than you lose. And that would be great. That would be great. If you could win more trades than you lose, that would be fantastic. But do you know that a trader who wins 6 out of 10 trades is an insanely good trader? Top-notch, one of the best. So you would think 8 out of 10 would be good. No, 6 out of 10 wins is an insanely good trader. So now you've got to think for yourself, well, I'm only starting out in this game. I haven't been in this game for 100 years. I don't know what I'm doing. Yet those guys in the institutional traders, those top guys are not winning 6 out of 10 trades. How am I going to do it? How am I going to make a profit if I'm losing half my trades or more? And this is where it all comes in. You know, and there's a good reason that you do lose half your trades. It's because you climb on the bandwagon because the bandwagon looks good. And then when you get on the bandwagon, it all turns against you and goes the other way, or your fear catches up to you, or your fear of missing out comes to you, or you don't have the patience and the trade robs you. That's why you lose more trades than you win. And you know what? There's absolutely nothing you can do about it. It is it is what it is, and you are who you are. Now there are the traders out there that can make insane amounts of money. There are traders out there that are insanely good at this and can pick things the right way. Are they lucky? Are they good? I don't know. Depends. Just depends sometimes. some of those traders put an insane amount of work into the research that they do to try and make those trades work. The problem that you have with winning more trades than you lose, or having a win rate, as they put it, is you have this insane win rate, you have this wonderful win rate because your system is second to none, but can you make the target profit on that win rate? Here's a classic example of that on gold. Look at gold. Let's have a look at gold, shall we? And see what we've got here. Here's gold, lovely trade. So you get into this trade because you think, well, that's wonderful. I'm going to go long on gold because it's broken through the structure and it looks like a great trade. And I'm going to put my target up here because I believe that perhaps it'll get to that level. And what happens? It comes up, hits a level, gives a pincer top, comes down, retests, goes back up to that level. What you should have done is readjusted your level probably to that level and had a relook. Maybe at this point you should have moved your stop loss up and started following it up, because what actually happens, it doesn't reach your target because it creates a double top and it comes flying back down again. In all likelihood, this will probably go up again. But what you've got a situation here on a system where your system worked, but then it went back and then it worked again, but now it's failing and it could fail all the way. This is a situation that you're always going to sit in, because the real charts are not like the ones you draw on paper and teach with. You know, I can draw little squiggly lines here and say, it goes up and it goes down and it goes up and it goes down, and you buy when it's low and you sell when it's high, and so on and so on and so on. But when you're calling it with real money and when you're calling it in the markets, these things become a completely, totally different scenario to what you expect. And the squiggly lines don't play ball. They don't go the way you expect them to. They go all over the place. Look at this one. It's like, ooh, it's not exactly a nice straight on squiggly line all the way up, is it? It's like this mishmash of lines that are falling over and going along and doing all kinds of strange things. So they don't follow the pattern that you were taught on the course. They don't follow that pattern in any way, shape, or form. They do something completely different, which is good to look for patterns in the market, and it's good to look for visuals in the market that will make sense to you so that you can see what's happened before might happen again. And this is why I say trading in the market is very often a thing of, you need experience, you need to remember these things, you need to have seen it before so that it looks like it'll happen again in the future. You know, once you've seen it in the past, you might like recognize it and say, ooh, I've seen that before, so maybe I should be doing X, Y, and Z because I've seen that happen before. It might happen again. Brent crude oil has created a double bottom here. Does that mean it's going to go up? In all likelihood, in all possibility, yes. Would I like to trade it? Absolutely. But what I'm going to do is I'm going to wait for it to break that structure. And when it breaks that structure, then I will take my long trade on it. And that's what I'm looking for. I'm looking for that breaking structure, and then I can see where I'm going with that trade. Hello, Elaine. Welcome. Good to see you again. Shane says he sees short-term patterns more than longs. It depends. You know what, Shane? You're going to find in your trading career that it depends on the period, the time, or I don't know if it's something to do with your psyche, or if it's something to do with the actual market. But you tend to start seeing patterns. You tend to start seeing specific patterns. And effectively, then you start getting this weighted strength towards long trades or short trades. So then you get traders that are just great bears. They can trade short so well, and they lose every long trade. And then you get traders that can trade long so well, but struggle with short, which is generally the more popular one. You'll find most traders are weighted towards the long side because we grew up with a natural thought that things get better, not worse. So when you get into the market, you've got the natural thought of it'll go up, it won't go down. So trading short becomes an anomaly for someone who's just starting out. It becomes a difficult thing to work out. How can this go the other way, or whatever the case? But you do end up with that scenario for a while, particularly in the earlier years where you are weighted towards one side, either a short or long. You just feel that you're better at that or you're better at that. That goes away with time. What I find is most traders will change to the point of, firstly, we move away from short-term trading, as in 5-minute, 10-minute, 15-minute charts. You tend to move away from that. Most of the traders that I know will move away from that and move to the longer-term trading, generally the 4 hours or the 1 hour. And what you tend to find happening is, whether it's short or long doesn't matter. It just becomes an anomaly. It really doesn't matter whether it's long or short. All you see is the pattern. All you see is the pattern down or up. It doesn't matter anymore. When I first started trading, I used to think, perhaps if I turn the chart upside down, I'll feel better about it. You know, if I could flip it over and look at it from a different perspective, maybe I would feel better about it. But, you know, you can't do that. It's pretty difficult. But after a while, after a long time, it really doesn't matter whether it's short or long. And what actually got me into, I used to be more of a long trader. I used to be more of a buy. And then what got me into shorting easier was the thought that they actually pay you to have a short with leverage trading on a contract account. So I thought, well, that's actually quite nice. I actually make more money if I actually short. So then I taught myself heavily to be a short trader and trade a lot of shorts. But then after you've done that, and then you were a long trader before and you're comfortable with both sides, then it kind of becomes relatively easy to trade both sides, and it really doesn't matter anymore which way it's going. But that comes with time. That comes with time. Bum, 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 bum. Yeah. If something is, you know, I noticed Sir Lancelot said here, it's so hard for me to short such a bullish asset. And you are quite correct. You know what they say in the market now, we're talking about gold here, for example. What they say in the market is, don't try and swim against the waves. Don't try and swim into the waves, against the waves, without trying to get over them. So the best way to go is with the flow, which is why they say the trend is your friend. If you're going against the trend, in all likelihood, you're going to lose. So, Sir Lunch, you are perfectly correct in saying, I can't find the ability to trade against such a bullish product, and you're perfectly correct. You should not be trading against such a bullish product. In fact, one of the things that I always tell you guys is, if you want to get into the shorter term trading, go and have a look at what it's doing on the weekly, go and have a look at what it's doing on the daily, have a look at what it's doing on the 4 hour, and then drop down to your time frame and trade based on the direction that it's taking, because then you are actually going with the flow. Don't go against the flow. So if gold is bullish in general on the weekly, on the daily, and on the monthly, and on the 4 hour, and you're trading on the 5 minute, then just wait for bullish trades. Only take long trades for the day. Why are you taking short trades against the flow? So look at which way the flow is going. And in a situation where the flow is going up, you stay up. You trend as your friend. So as I said to you guys, we trade 3 ways. And always remember, we trade 3 ways. And the 3 ways are simple. You trade with the trends. In other words, you don't go against the flow. You stay with the flow. You trade in the range. So there in the range, you're not going against anything. You're following the range sideways. Then one of my favorite trades is, of course, the counter trade, which is the breakout, breakdown, or just counter on the resistance and support. That is my favorite, because then it's actually broken the structure. So you had the structure and it's going in that direction. Now it's broken out of that structure. Now when it breaks out of that structure, now you know there's a clear indication of a possibility of it turning and going the other way. And that's normally because it's something that's either overbought or oversold. And what did I say to you a couple of weeks ago, or last week, or whenever, or I always say it to you, the institutional traders often use the relative strength index. They often use relative strength, overbought, oversold, to make their decisions on purchases and sales. That said, on gold, that changes, but they know that changes because they're in there and they understand why that's changing. If I put the RSI on here, and I look at gold, it's going to be insanely overbought. Oops, not anymore. It's actually come down a bit. Okay, wonderful. But in general, look at the length of time that it's actually been overbought. It's been above the 70. It's been seriously overbought. Now, if you had sold there, you would have been at this point, you would have had to sit in the market all the way up to there, and you would have lost a fortune. In other words, the market would have remained solvent much longer than you can. In other words, it would have taken all your money going up to there. So for an institutional trader, they can work this. But for you, the retail trader, this is complicated, which is why we don't generally use the RSI to trade with. We just use it as a base, an idea of what's happening and what are they doing? What's the possibility? Okay. But the reason for this is because all the banks are buying, because they're seeing something in the market that maybe you and I are not seeing. Maybe it's in the way that they see that maybe the companies are going to have bad results in the future, maybe because of the government shutdown, maybe they're seeing problems with the indexes, they're seeing problems on the investment side, and they're thinking, we need to put our clients' money somewhere. Where are we going to put it? Let's put it into gold and silver and copper and whatever else. And then you end up with this extended overbought period. So this can remain overbought for an extended period of time. Now, what you will notice is with gold that's been bearish on this RSI is that every time it does try to relax a bit, try to take away the overbought situation, it only comes down to the middle of the 50 here, turns around and goes back up. And this has been happening all the way back. There's a good possibility that this is now going to hit that line, turn around and go back up as per price action and start going in the direction that we expect it to again. In other words, come back and retest again and continue on up, because this is institutional buying, and they've been buying and keeping it overbought because they're looking for a place to put their money. So that's what makes the difference here, but because they know something that maybe we don't understand or don't know. And they're probably thinking that maybe the S&P 500 is due for a huge correction. The Dow, the NASDAQ, the DAX, all of them are maybe due for some kind of huge correction. And if they're starting to feel that, they'll start moving the money to hedge it in a safe place like gold or silver or copper or something like that. And that is why you get that scenario of overbought for such an extended period of time. So keep that in mind. So yes, Sir Lunch, you're perfectly right. You don't want to trade against the trend. You can be looking for trouble. So that's why we trade price action. We don't trade RSI. Is because we can use those three methods that we trade with. We trade with the trend, we trade in the range, and we can counter trade. Those three methods keep us in the game. They keep us going, and then we can manage our stop loss. That's the only way that a retail trader can trade. You have to bear in mind that an institutional trader has an advantage over you, and that is money. That is deep pockets. If you have deep pockets and you have huge sums of money to trade with, then be my guest. Trade without stop loss. That's fine. Go for it. You can trade with a view to it's overbought and eventually it's going to come down and I'm going to make my money, or oversold and eventually it's going to go up and I'm going to make my money, depending on the product. Doesn't always work though. Doesn't always work. For example, I showed you guys recently with the euro, United States dollar, when somebody said to me, yeah, but Forex always comes back, so I don't need a stop loss. Okay, if you've got deep pockets, I get you. But the euro US dollar I always use as an example because I know that a couple of years ago, the euro US dollar was at 130. So if you'd taken a short at 130, you would have done very well. But if you'd taken a long at 130 and said, well, it'll always go back there, you'd be in trouble now because you'd be a couple of years in and you'd be in a loss, and you'd still be in that loss, and you'd still be holding on to that loss, and you'd be paying fees, and you'd be just sitting in that loss forever, and that money's tied up in that loss for a long period of time. So your best bet is to stop loss out of it and get out of it, which is what I did on the South African rand, I think yesterday. I had a long trade on the South African rand again. I keep doing that, and it went against me, but I think I got out of it for $60 or something like that, something equally ridiculous, a very small loss. And I decided it's gone against us, it's broken structure. let's just walk away. Let's walk away and start again, and rather than taking the whole loss. Because you can hold on to this trade forever if you've got deep pockets. It really doesn't matter, but then you're just sitting holding on to a trade that you really don't want to hold on to. So while I do get married to trades as well, and I make the same old mistakes that everybody else does, you've got to look at that scenario and say, perhaps it's a good idea to let it go. This one, that gets taken out with a trailing stop. So I like it when it gets taken out by a trailing stop, because what you're looking at then is at least you didn't lose anything, at least the trade didn't cost you anything, and you've actually made a profit. Even though it's a small profit, you've made a profit, because as I've said to you, your trading should be like everyone else. You should have a scenario where a couple of trades make you a gargantuan profit every year, and then a lot of the trades actually reach target, and then about 60% of them make you the small loss and the small wins, which are all a mishmash of those stop losses being moved up into take profit and break even and that sort of thing, and a few stop losses that got taken out for the full amount, which will make a difference to the account at the end of the day. As I said, the VIX has paid off, so that's been a good one this year. It's just paid off again, so that's absolutely fantastic. That's a biggie. Those are the ones you look for. Those are the ones that make you the dosh throughout the year. Just let the little ones come and go, and it really doesn't matter. It is more difficult on an account like this, where there isn't a VIX and there isn't a bunch of other trades that are available, because this is a funded account or whatever the case. But you can still take the trades and they'll still make you the profit at the end of the day, and you can still stay in the game. You don't have to be thrown out of the game. Okay. Also careful about shorting until clear trend. Too many times it went against me. What I always say, Fonny, is try and follow the basic principle for the system. Okay, we all know the system is 50-50. I hope we all agree on that by now. I hope we're all on the same page when I talk about the system being 50-50, not the strategy. The strategy is giving you your edge. The strategy is going to make you your money, because you're making more on your profits, losing less on your losses. So the strategy will eventually make you money. But the system is 50-50. So no matter what we do on the system, no matter what trade we take on the system, it's going to be 50-50. Whether it's gold, index, whatever, it's going to be 50-50. Even though this is bullish, and it's weighted to the long side, and you shouldn't be taking the short yet, it's still a 50-50 trade if you take it long. It could go up, it could go down. There's no guarantee. It's just that you feel, because this has been bullish for an extended period of time, everything is looking like the trend is your friend, and then you buy it on the green candle and you think, well, it'll continue on long, and just your luck on that particular day, things turn against you. And it goes the other way, and everything changes on that particular day that you decided to take the trade, when you'd wish you took the trade down here when everybody else was taking it, but you come along and you take the trade at the top here because you've finally been convinced that gold is the buy, and you get in and you buy it, and on that particular day everything changes. That's why the market is 50-50. It's not guaranteed to make you a profit. So that's why we trade those three ways. And if we trade in the trend, and it's in the trend, and you're going in that trend, you've got a chance of winning. If you're in a range, and it's in that range, and it's bouncing off the resistance, and you go short, or it's bouncing off the support, and you go long, you're in a chance of winning. And if it counter trades or breaks out, breaks down, you take that trade, and you've got a chance of winning. Those are the three ways that we trade, and if you stick to that on the system, then you start to give yourself at least a 50-50 advantage, and then you apply the strategy to every single trade. As I've said before, you can take all these lines off here and just look at a chart and say, oh, I think it's going down, and short it, and it's a 50-50. You don't know if it's going to continue on that way or not, but the way we trade is we try and trade with a little bit of knowledge, with a little bit of an edge, with a little bit of information, so that we can try and be on the right side of the trade as often as possible. I mean, I would love to have a win rate of 9 out of 10 or 8 out of 10, in the sense of reaching target and that sort of thing, because my profits would be insane. They would be amazing. They would be great, wouldn't they? I'd be making so much money, I wouldn't know what to do with it. But they're not. And once you accept that they're not, then you have to work out how you're going to make the profit. So that's as simple as it gets. Now, you take a look at a trade like gold and you say, oh, there's a double top. Now, you recognize that there's a double top. I mean, that's insane. That's a full-on double top. So you think, well, I should go short here, shouldn't I? But hang on a minute. Firstly, it's been bullish since the dawn of time all the way up here. The banks have been buying like crazy. They're not selling yet. Things haven't changed yet. You get this double top and you think, well, that's a short. No, it isn't yet, because you're still in the bullish trend. You've broken out of the bullish trend to the upside. You've got a breakup and it's going crazy. And now you're getting this little bit of relaxation. It's probably going to hit here and continue on to the upside. So be careful. And if it breaks past that level, then you've got a strong breakout to the upside. There's a lot of people that are calling it very bullish. And actually, I had someone in the comment the other day, I hope I didn't say the wrong thing in a video, mentioned to me that I said it was going to 7,000, and didn't I say that the market's 50-50? And if you're on this live show, or if you are listening to me, I don't know if I said the wrong thing, but I don't call anything. I don't predict anything, because I'm not capable of doing that. I don't have any crystal ball. So if you heard me say that, it's probably mistakenly said. What I would normally say, for example, with gold is, people are saying it'll go to 7,000. So what I'll say is, it's expected that it'll go to 7,000, that some people are expecting it to go to 17,000, but I don't expect it to do that. I just trade what I see and go with what I hear. The S&P, I do expect it to go to 7,000. Will it get there this year? I've actually called it. I shouldn't be calling it, but I called it, but I'm not predicting it. I can't predict it. I can't say to you that it's actually going to go to 7,000. What I'm saying is, I think it might go for 7,000. And the reason I think it might go for 7,000 is because it's a round number one. Number two, there are some clear signals that it's heading in that direction. And normally people will try to target those round numbers wherever they can. So there is a strong possibility that it could get to 7,000. I'm not saying as a prediction that it's going to get to 7,000. But I could, because it will get there eventually. I don't know when. It could take 5 minutes, it could take a year, but it will get there eventually, in all likelihood and all possibility. So it's the index, for heaven's sake, so it will get there. All I'm saying is, I'm not predicting it's going to get there now. I'm not predicting it's going to get there by Christmas. I'm not predicting it's going to get there anytime soon. I'm not predicting anything. All I'm saying is, in all likelihood, it'll probably get there. Okay? So, I know it's easy to misinterpret what I say sometimes, because you hear a lot of other people actually say, oh, it's definite, it's this, it's that, and they're predicting the market. I've told you I cannot predict. Neither can you. Nobody can. All I can do is give you what I see and tell you what I see, and my feeling on the matter. That's all. Okay. Just for that matter, for that information, do I think the S&P 500 is going to end here? Well, I don't know. How would I know? How could I possibly know? All I can tell you, from my perspective, from my side, is that clearly this is hitting a resistance. It's hit that resistance level, and it's bouncing off that resistance level at the moment. Would it go to 7,000? Possibly, but it could actually correct here. Now, if it corrects all the way down to, say, 6,300 or even 6,000, the possibility of it reaching 7,000 by the end of the year kind of changes. It kind of diminishes a bit unless you get some kind of strong run. But if it breaks to the upside past the 6760 and jumps up, then there's a good possibility it's going to reach there before the end of the year. So, yeah, you know, can I predict it? No, of course I can't. Nobody can predict it. So anyway, guys, for those of you who got to the video late or have joined the live show late, go stand in the naughty corner. No, I'm just joking. Don't forget, in the beginning of the video, I have done the difference between a trading strategy and a system, and information is at the beginning of the video for you guys if you would like to go over it and go over today's session. As I said to you guys, in every live session now, I'm going to talk a little bit about something. I'm going to give you guys a little bit about some information on the market, some story in the market. Sometimes it might just be a technical indicator. Maybe we'll go over the RSI. Maybe we'll go over the moving average crossover system or something. Usually 5 or 10 minutes in the live show. I'm just trying to bring a little bit of value to the live shows for you guys, rather than me just rambling on for 2 hours talking a whole lot of rubbish, which you guys enjoy anyway, but me too. I love it to bits. But let's put a little bit of value into it. So it'll be about 5 or 10 minutes of just something useful to you guys that you guys can take home and use and go over if you need to. And you can always go back to it. And I believe you can actually, I don't know how it works, but I think you can clip it or something like that and keep it for yourself and go back and have a look at that if you need to. So it's a bit of training and all the rest of it. So yeah, just for you guys, because you support me on the live shows, you might as well get that bit of added advantage to yourselves as well. You'll notice that you guys that have supported me on the Telegram channel, I give you some of the trades that I do on a regular basis, and so you guys can look at that as well. So that helps as well. That's just for a bit of fun. And the Telegram channel, guys, is completely free. There's nothing to pay for. You can just have a bit of fun there. There are limitations on that thing, though. I believe we can only have like 1,000 people or something eventually, but we'll see what we do and how we go. We haven't taken any more trades here. The German DAX, let's just have a wee look at the German DAX. So what we got at the German DAX moved up, broke out. So I'm just going to take these out because we don't need those anymore. That's now changed. Too many lines on a chart. Never a good thing, is it? Okay, so we can actually move this along a little bit and just see. See, this is now starting to turn around and decide to go short. And the initial short trade is gone. I see it went long again, it broke up. It's probably going to come back and retest this level here, probably retest this level here. So it's probably going to come back to 24,000 before it maybe bounces back up again. So let's see how the general market plays out before we do anything there, and see what goes down. 7K is roughly 161% on the fib extension. There's a lot of reasons why I say the S&P will probably reach 7,000, but note the word probably, and that's what I was trying to talk about here. Is somebody was asking me, didn't I say the market's 50-50, and I'm predicting that the market's going to 7,000. I'm not predicting anything. I'm saying in all probability it might get there, and it probably will because it's an index. I just don't know when. And the probability is, and you guys know there's probabilities. You look at the Fibonacci and it's on the 161% on the extension on the Fibonacci. But my reasoning might be slightly different. My reasoning is it's heading towards that in the trend, and everybody targets those round figures. But it could go the other way. The market's 50-50. It could just bounce off this resistance here and go all the way back down to 6,000, and then it's not going to see 7,000 this year. But don't worry, it'll see it next year. Or it could break up now and it could see it before the end of the month. So, you know, we don't know. We can't call the future. The trading is 50-50. All I'm saying is in all probability it will get there, and I don't know when. But human beings tend to target round numbers, and you can say what you like. We always do that. There's no way around that, and that's what's going to happen. We're going to target a round number there, and we're going to go for it. And the guys are going to push for it. That's what they do. It's a bit of a game. It's a little bit of a game. Bitcoin, on the other hand, a bit of a different problem we've got here. This has become bearish, and I was talking about it last week, and I'm talking about it again. It's in that bearish trend. It's hit the top. It's bouncing down. It's going down. Looks like it's going to come down to the 100,000. Now, at the 100,000, probably in all probability, bounce up, maybe come back up a little bit again, and then drop down. I'm predicting, careful of the word predicting, I'm thinking that Bitcoin is probably going to go down to 90,000. So note the word probably. I'm thinking because there's a head and shoulders here, and if you project this down, it projects down to about 90,000. So there's reasoning behind what I say. It's not pie in the sky. I don't, you know, there's a bit of science behind it and a bit of thought that goes into it. It's not just, oh, I think it's going to go to 90,000. There's a reasoning behind it. I'm looking at that head and shoulders. I'm looking at where it projects to, and it's projecting down to about 90,000. Somebody the other day mentioned to me they think it might even go down to 80,000. And to be fair, if it gets down to that level, I'll tell you all, that's probably a good place to start looking for a quick buy with a view to it going back to 120,000. So, you know, if it gets down to 80, 90,000, it's probably going to be a reasonably good buy. So if you can buy it at around, it starts to turn around at 90,000. Obviously, you've got to wait for the signals. You've got to wait for it to break structure, turn around, go in the right direction, all the rest of it. But if it does start to do that, then that will probably be a good area if you've got the funds to cover any losses down further down. It might be a good idea to grab some there. It might be a good buy. 90% of traders lose 90% of the money in the first 90 days. The other 10% listen to Rob. You know what? Yeah, you know, when you say the other 10% listen to Rob, I get the feeling that, yeah, the smaller percentage listen to the reality of it. Most people don't want to hear the reality of it. I noticed that most people want to hear that they're going to make lots and lots and lots of money every day, and the money's just going to fall out the sky, and they're going to get into trading, and they're just going to become millionaires overnight, even though there's nowhere in the world where you can take a sum of money and multiply it by 1,000% or 100% or anything to that effect in 12 months. But we're going to get into trading, and that's what we're going to do. We're going to take our $1,000, and within 12 months, we're going to turn it into $100,000 because Joe Soap told me we can do that. And that's what they want to hear. That's what people want to hear. They don't want to hear that it's a slow process, it's a painful process, and it's a difficult process. No one wants to hear that. No one wants to hear that it's a 50-50 game. I get a lot of flack about that because they want to think that you can beat the market. Nobody wants to hear that you can lose, that there's a possibility that you might lose trades, that you might lose money, in fact, that you might lose all your money. Nobody wants to hear that. So yeah, I've noticed that in the markets. I've noticed that's a theme that people are only interested in, I'm going to make a profit. And I can actually prove that by just putting out a couple of thumbnails and a couple of titles that say I'm going to make you $1 million today, and watch how well those videos do. So yeah, I don't want to do that though, because then I'll be talking rubbish, won't I? So anyway, explains my bad luck. Yes, the truth is a very hard pill to swallow. It's an insanely difficult pill to swallow, and you know, a lot of people would rather look away or go and hide behind the couch or just not deal with it. So in other words, a lot of people watching trading would rather watch the guy that's telling them they're going to make millions than watch the guy that's telling them you're going to struggle to make the millions. And a lot of people would rather watch the trader that's showing them, today I'm going to make $100,000. Watch me make $100,000. Click, 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 click. Look at that. I made $100,000. Maybe it's jealousy. Maybe it's because they want to see that. Maybe it's because they enjoy seeing that. I honestly couldn't tell you. But what I can tell you is that's the general human nature, is they want to see that. They don't want to see that it's going to be quite difficult for them. The interesting thing is, here's a guy watching a trader make $100,000, $200,000, whatever, and is thinking, I want to do that, but he's only got $1,000 or $2,000 in his pocket and thinking, I'm going to make $200,000, not realizing that the guy who's making that $200,000 profit or losing that $200,000 has got $2 million in the brokerage account that he's trading with. So, you know, it kind of makes a difference. The capital amount makes a difference as to how much you can actually make, even on leverage trading, because you have to realize that on leverage trading, you need a margin. You need a margin amount available to you at any one time to take those trades. You can't trade without a margin. And if the margin's not there, they won't let you take the trade because they want to eat up your margin with a loss. Hmm. Hello, Daniel. Good to see you again. Yeah, it's always good to dream. There's a lot of this thing going around on the internet. You must manifest what you want, and I agree with that because effectively how that works is if you manifest what you want, then it works because you do the things that will take you in that direction at the end of the day. But you can't expect it to fall out of the sky. You can't say, I'm going to be a winning trader and then not know anything about trading and start trading and expect to win, because you're just going to be like everyone else. What makes you a winning trader is the dedication of figuring it out, doing it on a daily basis, gaining the experience, learning how to do it. That's what makes you a better trader or a better anything. If you keep on doing it, you'll get better at it. Most apprenticeships on anything or internships on anything normally take a couple of years, and then you can go and write your so-called exam to qualify as whatever. And the nice thing about being a retail trader is you don't have to write any exam, you don't have to do anything. You can just trade with your money. You just need to put your money in the market and get going. But of course, the danger of that is there's so many people who do it without knowing exactly what they're doing or what risks they're taking when they do it. Now, as much as these brokers put out the trading is risky disclaimer and say to you, before you trade with us, you need to understand that 75 to 95% of leveraged traders lose money. Money, though, traders just ignore it. They just don't see it. They don't look at it. They don't think, well, am I going to be good enough to do this? No, we immediately go, I'll be in the top 25%. I'll be in the top 5%. Easy. Of course I'm going to do this. It's going to be easy. If it was so easy, 75% of traders wouldn't be losing if it was so easy. And that's the question you have to ask yourself is, why do people still lose? And it's simple, really. It's because the market is 50-50 and because people still think that they can make the money on the charts when the only way you can actually make any money is on a strategy. Have a strategy that's going to make you money over the portfolios, not necessarily on one portfolio, on a few. Once you understand that it's time in the market, then you start to understand that you're not going to time the market. So the only way is to try and have a system around timing the market that's going to make you a profit with a business plan and a strategy, which is what we went over at length in the beginning of this video. So I don't want to go over it again at length and bore the hell out of you. So if you want to see that, just watch the first 10 minutes of the video. Okay. Yeah, that's exactly it. It comes from you putting the work in and the effort. Yeah, no, it's actually a funny thing how people do believe that it's just gonna drop out of the sky, and it doesn't. It doesn't just drop out of the sky. You got to put the work in. You got to understand how to trade, and how to make a profit and how to strategize. There's far too many people out there that believe that charts can predict the future. Far too many traders out there that believe that charts can predict the future, that a win rate can make them wealthy. Because they've been told that if you win more trades than you lose, you're going to make money. And it makes sense, when you don't think about it. When somebody just tells you, if you can just win 7 out of 10 trades, you're going to be profitable, aren't you? And it makes logical sense, doesn't it? But they don't tell you that, if you're mishmashing the amount that you trade on every trade, if you're not taking the same amount on every single trade, if your wins are small and your losses are big, that you're going to lose, they don't tell you all that stuff. They just tell you that you can just win more trades than you lose. There's no structure to it. There's no idea. There's no plan. It's just win more trades than you lose. And yeah, anyone can do that. I did it many a time where I I did the day trading thing, and you trade on the 5-minute charts, and then you win 7 out of 10 trades. The trouble is, you win 7 trades, and then the 8th trade, it wipes out all 7 of those wins, and that's completely demoralizing. That's like, you worked so hard to win those 7 trades, because believe me, as much as you win, whether it's small or big, as much as you win, it's a lot of work. And you get to those 7 trades, and you're really happy that you've won those 7 trades, and then the 8th trade takes you and wipes all those 7 trades out. That is insanely demoralizing. So now you've learned from these guys that you just need to win more trades than you lose, and then you find out that's not true. It doesn't work like that. So that's why when you realize that time in the market is the only real way to make money with investing and that sort of thing, but if you time the market and you learn how to make the profit within timing the market, then you understand that managing your loss, managing your risk is the most important part of that business plan and that strategy, and that you understand that you need some structure to the amount that you trade on every trade, and that the structure needs to remain in place so that you can show a profit. Then you understand how the strategy makes you the money. Like I said, we've gone over the strategy in length at the beginning of the video, so please go over that and figure it out. I've also said it a million times that you need capital to trade. You know, you can't trade without capital, even if it's leverage trading. If you need capital and you don't have capital, then you're going to have to do a prop firm or a funded account. That's your only option. I've left a couple of links in the description for that as well, but it's not your favorite way to go. I use these accounts for educational purposes for you guys and for the show and that sort of thing, so that I don't mess up while I'm busy doing training and stuff like that. But the best way is to have your own cash account and cash in a leveraged account and that sort of thing. But I wouldn't do it immediately. In other words, if you've just started trading today, now I know a lot of you haven't, and I know a lot of you have been around for a few years, so you're okay. But if you do have a capital lump sum amount that you've achieved somehow by either saving or pension or retrenchment or whatever it's from, or some kind of insurance or whatever, don't just take that and throw it all in the pot and start trading. First, learn how to trade. And I don't say just first learn how to trade on a demo, okay? Yes, learn how to trade on a demo first and learn all about trading. Learn all about the psychology of trading. And the best way to learn about the psychology of trading is actually maybe to have a funded account in between where you've risked some real money, and then try and learn the psychology a little bit that way before you take your lump sum and throw it in the market and throw it all down the toilet, because then you're in trouble and then you've lost all that money. So it's a good idea to actually preferably just, like I say, start with a demo, learn to trade, learn the psychology, learn the strategy, practice the strategy, then try maybe use a funded account or something like that. I used to hate funded accounts. Last year, if you asked me about a funded account, I said, it's a scam, don't go near it. But this year, I've warmed up to them in the sense that they've become a useful tool, specifically for like you guys to maybe put between yourself and your real money and your cash. And it gives you a little bit of a psychological learning curve. It's not perfect, because obviously when you put everything on the line and your last few cents on the line, then it becomes more difficult psychologically. Use your profits from that prop firm to find your cash trades. The amount you need in a personal account, Sir Lancelot, is really dependent on your needs, okay? So, for example, your needs in different countries might be different as well financially. What you've got to look at is, I'm going to get maybe 20-25% back. You're probably going to make more, but let's say just work on a round figure and say, if I was to only make 20% back on this money that I'm putting into the market, because that's the best way to look at it, right? Don't look at it as I'm going to double the money or this or that, because you're looking at overachieving, and you'd be lucky if you break even. So let's say I'm a recent trader and I'm looking at making maybe 20, 30, 40% on the money, but let's say I can only make 20% on the money. How much money do I need if I put an amount into an account? How much money do I need to get back from that? And then work it out like that. So if $10,000 is enough and you only need $2,000, then that's what you need. If $100,000 is enough and you only need $20,000, then that's what you need. Okay, look at it from that perspective. Be a little bit more realistic about returns. You will make more most likely if you do it properly and you do it right. But if you don't, also you need to have a backup plan as to where the money's coming from and how it's coming in. Which is why I always promote it to the young guys. Get started on the investments, because that's where the money is going to come from. That's what's going to bring you the money. That's going to bring you 30, 40% every year, and it's going to grow. But trading is, it depends how much you've got. Now, the whole thing with the leverage trading is if you only have $10,000, which is fair, in some trading companies, you can maybe trade $100,000. In others, you can trade $500,000. But just be careful how you go about that, because if you over leverage, you can also wipe yourself out very, very quickly. So if you can get 100 to 1, that's fair. Then if you can trade $100,000 with $10,000, that's fair, because then if you were to make a good percentage on that $100,000 with that $10,000, then you might make a decent amount of money. But also remember, if you have $10,000 in an account or $100,000 in an account, you can't trade the whole amount in a leveraged account. You're basically trading half of it. On the margin, you're using half of it and keeping the other half as powder. So you're never going to risk the entire 10,000 because it'll get wiped out in one shot. So you're going to risk percentages of that. And so divide that by 2 as well. So if you can trade $100,000 with $10,000, then work on it. I'm going to trade $50,000 in all likelihood. So work on that as your profit margins, and then see how you're going to go. But there are, it is very possible for you to make high percentage wins on leverage trading with cash money if you do it right. But yeah. Are you going to double your money? I don't want to tell you you're going to double your money. That's why I say be cautious about how you approach it. Be cautious about how you look at what your profit margins are going to be over that period of a year. And what I always say is err on the side of caution and say, well, let's say I make 20%, and then work with that and say, is that enough for me? So do I need more money in there to make more money, so to speak? Okay. That's quite a rant. I had some more tried before, but it was never a good choice. Avoid risk. You are, after all, a trader, and that's what we do. So lunch a lot, 500K. So lunch a lot, 500K is a really good sum of money to trade with. It really is. It's a lot, and just make sure you don't lose it. But yeah, it's a lot, and that you can do a lot with. That you can do a lot with, because you've got deep pockets. Well, not deep pockets, but you've got enough deep pockets to play around with. Where the biggest problem comes in with the guys that don't have that sort of sizable amount, they will struggle with the deep pocket scenario. In other words, if I've only got $10,000 to put in the market and it starts losing, I don't have deep enough pockets to cover the big win, to get back into the win, or whatever the case, or to hold on to the trade. And that's where a lot of people fall short. But if you've got a big enough account, then you can trade with maybe lesser amounts and lower percentages, with a view to staying in the ball game longer and holding on, like the big investment companies do. Because big investment companies, when they trade, they actually don't trade with stop loss. They don't trade with stop loss because of the size of their trades. So they can't just stop out of a trade because they got millions of shares in any one trade. So for them, they have to have an idea of when they're getting out of a trade, or if they need to get out of a trade. It's usually a group decision as well. We need to get out of that trade. And then they start looking for liquidity to get out of that trade. So that's how they handle their stop loss. They don't put a stop in place. They don't even put a take profit in place. They have an idea where they want to get out. They have an idea where they want to get in. And then they search the liquidity out so that they can get in and out of those trades. That's how they do it, because they've got big enough pockets. So they'll stay in a trade for as long as they need to. But they can afford to stay in that trade for as long as they need to because they've got the capital to do it. Makes a difference. Capital is a very important thing that a lot of people don't get. That capital is more important than you think in trading. Yeah, capital is important, but growth. You see, if you're growing an account, you can start a cash contract account or futures account, broker account, leveraged account with any amount of money. You can. I think there are some basic minimums with most of them. I know the one that I trade with, I think the minimum is like 50,000 Rand or something. Or maybe they'll allow you to start with zero. I actually don't know. Okay, but it's a small amount in dollars, whatever the case. And then you can start with a very small amount and then just compound, like Sir Lancelot says, you can compound effect grow it, right? The problem comes in is the traders who need to live off of it. If you need to live off of it, that becomes a problem. That becomes an issue as to the amount of capital that you've got. And you have to look at plan A, plan B, plan C, so on. So be very careful of needing to live off the money and needing money desperately now, because that affects the psychology in a huge way as well. If you say need money on a weekly basis or a monthly basis from your trading, you're going to overtrade. You're going to take trades in desperation. You're going to make mistakes in your trading because you need to make the money now. Whereas if you're just compounding, if you're just putting it in there and you're saying, I'm just going to grow that money to a gargantuan size and I'm going to watch it grow and I'm just going to keep on trading it until it's much, much, much more, then suddenly it becomes much less of a hassle because you won't overtrade it. You'll trade it as you see and as you need to, or as you see the trades coming to you, which is what you should do. You should always wait for the trades to come to you. You don't want to be chasing after the trades, because what actually goes wrong is the minute you start chasing after the trades, you start searching for the trades, you start looking for the trades, that's where it all goes pear-shaped. And that's where you start losing the money, because you're forcing trades. You're like, I need a trade, I need a trade, I need a trade. Which is why I often, when people say to me, should I only trade this one instrument? Should I only trade this two instruments? And I always tell them, no, trade everything. Look for everything, because then you're not forcing the trade. The trades are coming to you. If you go through all the trades, if you go through all this list, and it's quite a decent watch list, I mean, there's a lot of trades to go through here, then with that, you can find a lot of trades that will be available to you at any one time. Just wondering why. I'm going to reload this because I don't know if it's my computer that's going slow, or if it's this actual goodie here. So I'm just gonna this platform. So I'm just gonna reload it and see if it makes any difference. Hey, yes, I haven't seen you for a long time. It's been a while, man. It's been a really long time since I've seen you out there. Yes, Bobby. How you been doing? And how's the ES been treating you? Have you been making lots of money on it? I hope so. I hope so. And if you missed the beginning of the show, every show I'll put out a little bit of training. So today was strategy versus system. Okay. Yeah, I haven't seen ES for a while, man. It's good to have you back. Good to see you again. Lovely to see an old friend come back. Okay, there we go. So I just want to see if this is working a little bit better now. It does appear to be. Yes, it does appear to be. There's obviously something on the servers on the other side are obviously struggling with these guys. Ah, there goes oil. Straight back up again. So I'm going to look at oil and I'm going to say, I want to trade it if it gets above that line over there, which is probably going to be about, oh, okay. So the double bottom is in over there. Let's put a horizontal line in on oil. Let's put a horizontal line in on, yeah, on that high there. Shall we? That level. Let's just see if it's going to go through there. That'll be interesting. I'm going to make that line yellow just out of interest's sake. Okay, which I don't normally do. I just want to see if it's going to cross there. If it crosses that 62.50, I'm going to buy it. And that'll be me back in oil again. Because, yeah, that looks decent to me. Okay, so oil is looking like it wants to go up again. That's lovely. Yesterday, many platforms across the board had issues with slow platforms. I use NinjaTrader and didn't have any problems, but many did yesterday. Yes, there was a big internet issue yesterday, I believe. AWS or something. Yeah, Amazon was involved with that as well. Big story, yeah. Yeah, it was Amazon's server affected the trading platforms, yeah. Thanks, Shane. I'm glad you like the way we mark up the charts. Amazon service in the USA had problems, but I don't know if there's a problem today. But I just noticed that this started running extremely slowly, so I just reloaded this one. Otherwise, we'd have to change platforms and go into one of the other ones. But that's a bit awkward now because I'm already busy with you guys on the live show here. I have to look for another platform, which is fine. We could have just uploaded or switched on the other one. But this one's got a couple of trades going, or one trade going at least. Yeah, I just want to see. Okay, so there goes the euro US dollar starting to go into profit. So that's about time. I am interested in this Brent crude oil trade. I really am. I'd like to see if that's going to be a decent trade. I'll just wait for it to cross over levels. And guess what else I'm going to look at? Let's see, what can we do with this one? This is one of my old favorites, of course. I'll tell you what, let's take it out. Let's have a look, shall we? See what we've got. So we've got another level there. So I think what we've got to do is most likely wait for it to break through that level to give us a decent trade. Yeah, I'll move that along there because we haven't got a trade yet. Let me take this out. I'll bring it back when we need to. Okay, too much stuff on the charts is never good. There is a level there, but it's only 2 points, so I'm not really big on that. I think it's trading in a range at the moment. It either breaks out of the range or it stays in the range. That's the way I'm seeing it at the moment. There is a level of supply here, of money. Let it break through that. Let it get up to this resistance. If it breaks out to the upside there, we buy. And if it crashes down, then I guess going back down again. So yeah, that's the level. You see, sometimes you just got to take a few things out to make the picture a little bit more clear. Okay. Ooh. Yes, just watch out on that NQ. My concern is fundamentally, not technically. Technically, I'm happy for you. You've got double top there, okay? Let's have a look at that. Nice big double top there. Triple top, actually. So there, that looks great. That's your Tech 100. For those of you who don't know, the NQ is your Tech 100, the NASDAQ, okay? So you've got this nice triple top here. and it's definitely calling us short and saying, let's go short. Yes, let's go short. That's a fantastic trade. And you've taken the trade. But fundamentally, it's results time. And on this tech side, I would be a little bit concerned about what results get released now on those tech firms, top 7 particularly, because if those results are good, it could affect it to the upside, but that's okay. You got to trade what you see. All I'm saying is just keep your eyes on the risk. Just watch your risk, make sure your risk is in place, because with the results coming out, but that, like I said earlier as well, with the earnings season in, what you've got to watch out for as well is people will have an expectation on the earnings season. And let's say we get good results on the earnings season out of the NASDAQ and etc. and whatnot. And everybody's happy and everybody says, oh, great result, great result. But the institutions might look at it and say, well, we've had this government shutdown. We've got a few things going on in the background. We've got tariffs going on. Maybe the results are not going to be so good in the next earnings season. And then when they look at that forward earnings, they're going to look at it and say, maybe we should look again. So you've got to be careful of that as well. So I do see why you are short on the NQ. I can see there's a good triple top there and a good short building. And it actually looks like a decent short, to be fair. Okay. You might get a runner out of it. Yeah, you might actually get a runner out of it. Okay, on the actual NASDAQ, you're getting a slightly different reading. But I know you trade the mini shares, so you might just have a slightly different figure, but that's okay. The chart will look similar. That's okay. S&P 500. The S&P 500, which is the ES in Bobby's world, that is a wonderful short trade as well, coming off the top here. But same old story. Watch your stop loss. Watch where you're going. You've got to be so careful of the fundamental news at the moment. And with them releasing their earnings season, there's a really good chance that the earnings season could bounce this either way. So I'm just being very cautious with the indexes at the moment. So my preference trading this week is more towards the Forex and the commodities, if I can. And I'm just keeping a close eye on the indexes as well. My shares are great because my shares will be there forever, so that's fine. And any investments that you might have in the S&P 500, you just leave them because it's spot. That's fine. But it's the leveraged ones that I concern myself with. And the NASDAQ is very volatile. The NQ is very volatile. It'll jump around like crazy. And then, of course, Bitcoin, we're just waiting for a nice long trade further down here at the 90,000. That'll be great because it's bearish at the moment. But yeah, I like the NASDAQ trade. It does look nice. It does look like a decent drop off there. Hopefully your chart looks the same. Cool. Yes, Bobby, I hope you've joined the Telegram channel. The link is in the description for those who don't have it. It'll be great to have you on board with the team. Yeah, absolutely. Always give people a little bit of a heads up when the S&P is going up and down, or the NASDAQ for that matter. I presume that you trade the US 500, the NASDAQ, and the Dow, and maybe the DAX. I don't know. The DAX, I like trading the DAX. The DAX is a great trade as well. DAX. There we go. And there she goes. The DAX is coming down nicely now, but it might just come down to retest. That in itself is an interesting trade because there was the short. Okay, profit taken, goes back up. Now it's starting to come down again, but how far down is it going to go? What I see is it probably coming down to this level in the middle here, this little support level in the middle here, because not only is that a support and an area of interest and an area of money and whatnot, it's also, if I can draw it in here, look at that money, that demand of money there. Oh, there we go. There she is. Loads of money lying there. There's a good chance it's going to come down, grab that money, and go back up. So I'm looking at this 24,000 level with strong interest, because this looks like an area of strong interest. Now, the reason I say it's coming back to retest that is it's broken structure, gone up, and it's coming back to retest that structure. It's going to come back, take this money that's lying here, in all likelihood and probability, bounce back up and start heading up again. So this might be a good long trade at around the 24,000 level if you want to keep your eyes open on the DAX. I don't know if the same applies to the NASDAQ. I didn't look actually. On the NASDAQ, now you're okay. The level's all the way down here at 24.2. It is quite far down, but there is a level. There is a level that you might want to keep an eye out for here, 24.4, 24.2. And that's a strong support level. So let's just take this up here. Let's just put that there. And I think you might be looking 24.252, 24.2, yeah, 24.250. You're looking at a support on the NQ there. Okay. All right. Just out of interest. And that would also bring you into a demand of money. Okay. So for the indexes, wait for the long trades. Let's just see what the S&P 500 brings us there. Same as the NASDAQ, same sort of scenario. I think what I want to do is just drop this down to here. There. There's the level. And that's the level we're looking for. And that's 6544. So 6550, what we're looking for in the S&P. 6550 buy, going back up again. So that looks decent as well. I think we can now take these trend lines out. We don't need them anymore. Those can go. Okay, so now we're back into a range with the S&P 500, and we can look at that. So I'm thinking, yeah, okay, that looks good. We'll probably take the short here, but what if it breaks to the upside with the earnings season? So let's just see how that goes. Okay. I mean, it's a bit tricky to short the S&P 500 when it's been going so bullish. So but it is rolling over. Look how it's doing the rollover thing there. That in itself is a bit tricky. Okay, interesting. I'm currently in a short NQ. Bounce and buy. Bounce and buy. Yeah, just let it bounce. Yeah, you know, I always say just wait for the candle before you take the trade. So, for example, even like the Euro-US dollar trade, waited for the red candle to confirm. But once the red candle is confirmed, you just make this bigger. So you got this breaking through here. Next candle's red. Red candle closes, take the trade, and hopefully the rest of the candles will be red as well. That's kind of where you go with it. Like I said, the charts are 50-50. You can't really predict the future. You can't tell which way it's going. No matter what you do, you take the trade on all the best advice and all the best information that you've got today. You're thinking, oh, this is the perfect trade. This is the trade for me. This is the trade I should be taking. The red candle closed, so I take the trade. And on that particular day, you know, it just decides, oh, well, everything's going pear-shaped today and I'll go the other way. That's the problem with trading. You never really can tell. You see, if you'd got in over there, it would have worked brilliantly, but you decide we're getting in here because we're getting in today. We're getting in much later than everyone else. And everything tells you that you should be going short here. So you go short. And then the world decides to turn upside down and do something completely different. And then it goes back the other way. That's just trading. And that's why trading is 50-50, because you never can tell. You can never really be sure. You can take all the possibilities and put them in place. That's why we have a strategy. That's why we put the strategy in place. That's why we manage the risk. That's why we look after the risk. That's why we try and trade the way we do. Because systems, charts can't predict the future. Simple. If I trade stocks and shares opening with a gap, over jumps my stop loss. If I trade stocks and a share is opening with a gap, what over jumps my stop loss? Do you have experience with that? Yes, but it depends on the type of share that you're trading. Okay, firstly, when you trade shares, make sure you trade liquid shares. In other words, when I say liquid shares, I mean top companies with lots of liquidity. In other words, like an Amazon, a Coke, just an example, Tesla, whatever, Nvidia, they got lots of liquidity. So they should, in all likelihood, not jump a gap because they generally liquid shares. But don't put orders in before the market opens. Never put orders in before the market opens, because while the market's closed, you get pre-market and you get things that are being said during the market. So what you've got to be careful of with shares, and this is something because we don't discuss shares on a regular basis. I probably should discuss shares more, but the reason I don't trade shares is because I have investment shares, so those I don't want to mix the two up. But share trading is slightly different to index and slightly different to Forex in the sense that you can get a situation where, let's say you bought Tesla and you own Tesla, okay? And I'm just going to go over here and I'm going to go to this page. Okay, there we go. And I'm just going to take it to that page and I'm going to go, this is the Dixie, right? So what's the TSLA? Okay, I'm just going to use Tesla. So let's say you bought Tesla and it's gone up beautifully and everything's fine. And then during the night, they launch results or they have earnings come out while the stock is closed. They normally come out after the market closes. It's a funny thing, right? So you've got the stock, you've held it the whole day, and you've traded into the stock. And after it's closed, they announce the results, and it bounces and it goes the other way. When it opens up tomorrow morning, it's going to leave a gap. And that's where your problem comes in, okay? If something happens after the close, and they talk about it, because shares close for the whole night, indexes and Forex and commodities close for like an hour. Whereas shares close at 5 o'clock and they open at 9 o'clock the next morning. So they're closed for that whole period. And when they're closed for that whole period, what inevitably happens is if something is announced during that period, tomorrow morning when they open up, they jump the gap, which is what's happened to you, Sir Lancelot. They jumped the gap. And this can happen, and it can happen quite often. The other thing you must watch out for, Sir Lancelot, is during earnings season particularly, shares pay dividends. Shares pay dividends, and if you're long on the share, and you long on the day that they announce the dividend, then you get the dividend as well, paid to you on the amount of shares that you own, which I used to do quite often in leverage trading. I would literally buy the share, make the profit, and get out as quickly as I possibly can. But if you are short on the trade, you have to pay the dividend back. You have to pay that dividend, okay? So just keep that in mind, that if you are short, you are going to pay the dividend in if it is a result on that particular day. If it's dividend payday, then you just have to look on the results as to which day is, you have to hold the share on that particular day to get the dividend. And if you're short on that day, you're going to pay the dividend in. So keep an eye out for that scenario as well. So you will get gaps. So let's say you took that share short there, and then they had good results during the night, and you wake up and you've got a gap and it's gone the other way. So just be very careful of that scenario. Okay. Trump signs rare earth deal with Australia. Yeah, there you go. So that's just for information, guys, just so that you know, if you're trading shares, there's a few little tricks that you're going to have to understand. There's a few little tricks that you're going to have to keep your mind on if you are trading with shares. There's a few little things that you need to know. It is easier to trade shares, but keep your mind on that. They do declare dividends, and also you do get that close period. And if they announce earnings or something, or if the company says something while they're closed, the thing I find with companies, with trading companies or shares themselves, is all too often I used to struggle with anything that happened with that company, any meeting they had, anything they released, any story that came out, would always come out after 5 o'clock or after they've closed. How do they do that? Because it's non-operating hours, and then suddenly they release the story, and it's always after hours, and then you can't get in and out of the share. Tomorrow morning when it opens up, all the big institutions have got the pre-market moving, and by the time you get in, you've got this big gap and it takes you out. So shares can be difficult in that sense. This is why I always say big time, try and trade the blue chip shares, try and trade the ones that have got liquid, that are moving with money, and also watch out for those scenarios. Okay. Sleuth, are you trading futures? Sorry, just joining now. With our strategy, go back and watch the beginning of the video, because today you're in luck, because today I actually discussed the difference between a trading strategy and a trading system. Okay. And normally I always talk about something. So just for you to know, today we talked about the difference between a system and a strategy. So you're in luck. If you start at the beginning of the video after the show's over, you'll actually see me talk for 10 minutes about the difference between a strategy and a system. And the reason I tell you this is because it really doesn't matter whether you trade futures, whether you trade contracts, whether you trade shares, no matter what you trade, the strategy remains the same. It's only the system that you have to tweak a little bit as to when you're taking the trades and how you're taking your trades. But this is contracts for difference in all likelihood. And at the end of the day, contracts for difference are based on futures, and everything is based on futures. In other words, if a broker sells you contracts for difference, 9 times out of 10, 9.9 times out of 10, they've taken futures and broken them up into contracts for difference for you. Now, CFDs are a great thing to trade because it's in and out, easy to trade, back, boom, done. Okay, futures have time limits and so on, but it's all the same thing. It really doesn't matter. It's all the same thing. Trading is all about the same thing. Leverage trading is all about the same thing. It just depends on the amount of leverage you got. What are we trading? We're trading indexes. We're trading commodities. We're trading crypto. We're trading shares. We're trading orange peels and all kinds of stuff. If it's tradable, you trade it, right? Doesn't matter. Don't get confused. I see a lot of people get confused with the wording futures. Futures is leveraged products that you can trade and you can get a hold of, and indexes and Forex and commodities and everything. Futures are the market, all right? That brokers get for you to trade, right? Now, futures are a thing. They're not like people are relating futures to indexes or relating futures to certain products. Futures are available to trade. So if you're trading contracts or you're trading futures, you can trade indexes, you can trade Forex, you can trade commodities, you can trade orange peels, you can trade whatever. It's available, okay? So don't confuse futures with a certain type of product. Certain type of product is a certain type of product. Futures is a product that you trade. I don't know how to explain that. Futures is a way of trading, like contracts for difference, or that type of thing. Terminology can mess people around, and if somebody gets it wrong, then you start to get confused. So just be careful of that as well. All right. Futures is not like, oh, I'm trading futures, so I'm trading in. No, futures is a product on the market that you trade. Futures are about if you trade futures, effectively where it came about is you have an expiry date on a product and you predict the future of the price. And if you get it right, you have a win. And if you get it wrong, you have a loss. There are guys out there that I knew that could trade futures and never make a loss because of the way they structured the whole package. Okay. But what the brokers do is they take those futures, they bring them into their system, and then they sell you contracts for difference. So if you're trading CFDs or something like that, you can also get spot trading and all the rest of it. So futures are a thing. Okay. Don't think as futures as you don't get everything in futures. Okay. So some products are left out of futures and you need something different to trade them, but futures are a product. Futures is not the S&P 500. Let me put it that way. Okay. The S&P 500 is an index which is available in futures. Okay. Let me try and separate it that way. Okay. Boom, boom, boom. Protagonist, bull pattern started. So nonchalant. Wow, that's great. Long D. Holding my trade overnight is tricky then, eh? So lunch, yes. You see, with shares on trading, I did hold my trades for long periods of time, in fact. And in fact, with shares, I actually didn't trade them on the 4-hour. I trade them on the daily chart, not even on the 4-hour chart. With shares, I preferred to trade them on the daily chart. And I would hold them for longer periods of time, but then I would hold liquid blue chip shares. In other words, shares that have got liquidity. And I never really suffered big time with overlap or gaps and things like that. If you're trading on the lower time frames, you are going to struggle with that with shares. With shares, you're going to have these moves up and down, and the gaps are going to nail you. So with day trading on shares, you have to get out on the same day. You can't hold overnight. Day traders don't hold their trades overnight, ever. So if you're day trading on 5-minute, 15-minute charts, there's no way you're holding that trade overnight. Whether you're winning or losing, at the end of the day, you need to get out of that trade. But if you're trading on the day chart, swing trading on the day chart, they call it swing trading now. I call it position trading. I always call it position trading. If you are swing trading, position trading on the market, then you need to look at it from a completely different perspective. And that is, you can hold it overnight, but you don't have those big gaps or whatever going on. So you can do it if you're trading on a higher time frame. That'll be fine. That'll work fine. Okay, so yes, Daniel, me too. I think on that note, it's time for me to go, time for me to sign off, and time for me to get on out of here. And I'll see you for the live show on Thursday. It's only Tuesday. Can you believe it? Ha ha, what a week. Let's make some money and let's have a great week ahead. Guys, I want to thank you for watching. Thank you for being here with me. Don't forget, go to the beginning of the video, watch the training, enjoy it. It's important that you get that training in every live show. On Thursday, I'll have something new for you guys. And if you've got some suggestions, drop them in the Telegram channel. I'll have a look at it and we'll take it from there. But guys, thanks for watching. I've got to be on my way now. So on that note, cheers, make lots of money. Cheers. And thanks for watching. Thanks for being here with me. And I'll chat